Hi guys, I'm filling in for Boris, who's on vacation right now. My name is Michelle Ong and I am the Director of Compliance and Underwriting Manager for LBC Capital and Lending B Inc. And my job is basically to watch over Lending B's ass. Some people would think that that's a party pooper, but some people think it's great. And it's a very interesting job. I'm never bored. It's a very dynamic role, and I love this job. So let's focus on this video, and I'm here to talk about how hard money works. How does hard money work? Hard money is a great alternative to real estate investors who are looking to leverage on their investments. Leverage is just a fancy word for borrowing money. So a lot of real estate investors have money and yet they use financing to buy real estate investments. And it works out, as long as the numbers work out, that's great for their investments. Why do investors choose to go to hard money lenders instead of banks? There are different reasons why hard money works better. First of all, hard money lenders are very fast. Usually it takes us 7 days. That's an average processing time from beginning to end. We can sometimes do it faster than 7 days, and maybe sometimes we'll do it a little bit longer than 7 days. But that's the general processing time of a hard money loan. And if you are trying to close fast, or if you were waiting for a bank to close your loan, and you don't have time anymore and seller is pressuring you to close the transaction, hard money is a great alternative for real estate investors. Another advantage of hard money is we do not require a lot of paperwork, unlike the banks. We don't require proof of income. We don't require a lot of times we don't require appraisals. Maybe 90% of the time we do not require appraisals, which already saves time. And we certainly look at, we certainly give chances to people who do not have excellent credit. It is not a borrower-based loan. It is more of an asset-based loan. So we look at the strength of the real estate asset rather than the strength of the borrower. So that is a good alternative for people who had some kind of hardship in the past, or who's having some kind of issues right now, but they are on the right track and they are moving forward in their investments. Another advantage of hard money is that we are a common sense kind of underwriting. We basically look at the whole picture. Does it make sense? Okay, so what are the questions that we ask when we are looking at a hard money deal? First of all, we look at, why does the borrower need hard money? Is it a time element issue? Is it a credit issue? Is it a property issue? So we look at why they need hard money. Second, we look at what are the risks and what are the returns. We would sometimes get into higher risk loans if the returns are also higher. So we look at the why, the what, the how, and the who when we are looking at transactions. The why is, why does the borrower need hard money? Is it a time element issue? Is it a credit issue? Is it a property issue? Sometimes the borrowers are strong, but the properties are not, and they cannot get bank financing. And so they need a bridge. So hard money loan is a bridge from the time that they buy the property and the time that they get a conventional long-term financing or they sell the property. So this is what we look at, the why. And another thing we look at is what. What is the property? Is it a single family residence? Is it a commercial property? What is the value of the property right now? What is the value of the property when it gets fixed or it has cash flow? So we look at the asset. We also look at who, meaning who is the borrower? Does the borrower have experience? Do they have, what kind of credit do they have? Is it bad? Is it good? Is it excellent? Is it shitty? And why? Why did they end up in this situation needing hard money? And then we look at how. How are they going to repay us? How are they going to service the debt? How are they going to exit? Which is the most important thing for us, is their exit strategy. And again, we look at the overall picture, and if we see that it makes sense and the risk is equivalent to the reward, then we approve the loan and we give the loan to the borrower, and we close and everybody's happy. But sometimes it doesn't work out and we have to deny based on what we find out. So this is a very simple explanation of how hard money works, but I hope that you guys learned something from it, and that you enjoyed this video, even if it's short and even if it's not Boris. So like Boris always says, have a great weekend, everybody.